Hi everyone, this is James Miller with the Miller Group, and this is going to be the market update for first quarter of 2022 for the Amelia Island Plantation real estate market. Before we get into the market update, just wanted to give a little plug for ourselves and say that if you or anybody you know is looking to buy or sell real estate here on Amelia Island, Dad and I would be happy to help. We here at the Miller Group value your business, and the market is really hot right now. So even if you just want a market update or an updated valuation of your home, we would be happy to help. Just give us a call at 904-557-5720. All right, now let's get into the market report. So the overall theme for the first quarter of 2022 market report for the Amelia Island Plantation is that inventory remains historically low while demand remains strong. And of course, those two combinations mean that prices are increasing. So let's take a look at some of the numbers here. The first data point that jumps out to me is the big reduction in the number of transactions. Sales dropped by 33 transactions, or 53%, in the first quarter of 2022 as compared to the same time last year. While pricing increased, this was still a 35% reduction in total dollar volume of property sold in the plantation. The next statistic that stands out is the reduction in the time on the market, which went from 48 days in 2021 to just 16 days in 2022. As any buyer in this market will attest to, properties do not last on the market for very long. Again, this is the result of low supply mixed with high demand. We also see that the average number of active listings per month decreased from 68 during the first quarter of last year to 40 during the first quarter of this year. Well, and it's important to note that this metric includes properties that are actively listed for sale, but also includes pending sales. So if you are really in the market actually looking for properties, that number of properties that you would be able to look at is actually lower. So instead of being able to see 40 properties, there's actually only 15 listed for sale that you would be able to go and look at. And of those 15, let's break that down a little bit. 3 of those are actually already built homes for sale. Only one of those homes is listed for under $1 million, and in fact, it's listed right just under $1 million. The other 2 homes are listed for quite a bit higher. One is listed for $3.2 million, and the other one is listed for $6.5 million. These numbers are significant because over the past decade, 82% of Amelia Island Plantation property sales have occurred under the $1 million price point. And so when we look at what's currently available, there just isn't a lot in what I consider the bread and butter of total sales in the Amelia Island Plantation over our past, or at least recent history. Again, going back to the 15 properties that are for sale in the Amelia Island Plantation, only 6 of those are listed for under $1 million. And of those 6, 2 are lots. So if you take those out, there's only 4 either condos or single-family homes listed for under $1 million. And 3 of those are actually listed at just under $1 million, so practically listed for $1 million. That leaves only 1 condo, which is actually listed for $650,000, which is kind of in that normal market range that we see a vast majority of our sales over the past 10 years. So that definitely shows you how our low inventory is contributing to a lower number of sales, which has just started really in the last 2 months of this first quarter. The next stat that I want to look at is pricing for single-family homes. You'll see that the average and median prices were actually lower in the first quarter of 2022 as compared to last year. However, this is not a result of lowering prices. It actually was a result of the homes that sold this year were smaller than the ones that sold last year. The average square footage from homes sold this year was 2,474 square feet compared to 3,185 square feet during the first quarter of last year. I promise you that pricing is not decreasing. It is in fact increasing, and it is higher this year as compared to last year. And you can see evidence of that by looking at the difference in the price per square foot of single family homes sold, which was $303 per square foot last year compared to $389 per square foot this year. Condo pricing is also increasing. While there was a huge spike in the average price, as you can see in this chart, this was mostly due to the type of condo sold. For example, this year a Dunes Club sold for $5.3 million, but it included 2 Dunes Club units combined into one with over 6,000 square feet. If this outlier is removed, the average price still increased, but by less. It increased from $655,000 last year to $937,000 this year, which is a more accurate reflection of market pricing. And it does show that condo pricing, just like single-family homes, is increasing over the same time last year. I think we will see these same trends continue during the second quarter of this year. Inventory is still really low, and I don't think we'll have the amount of inventory we need in order to have the same number of transactions during the second quarter of this year as compared to last year, because we're up against actually a record-setting number of transactions that occurred during the second quarter of last year. However, prices will continue to increase, and the actual total dollar volume of sales could be similar to last year because we have quite a few expensive properties that are currently pending. If you look at the average list price of our properties that are pending, the average list price is $1.88 million, which is quite a bit higher than last year, which was at about right around $1 million was the average list price during the second quarter of last year. This does include an $11 million house that is currently under contract, but even if you remove this outlier from that average, the average is still $1.39 million, which is about $300,000 over what the average list price was last year. So while I expect to see fewer transactions during the second quarter of this year compared to last year, I think pricing will continue definitely to increase. The first takeaway is that if you want to obtain the highest price possible for your property, you want to make sure that you list it on the open market with a realtor. The reason why I say this is that there is a slew of buyers out there waiting for properties to come for sale. And when you list it on the market, you're giving them a chance to compete for it, which means that you're going to obtain the highest price possible. A recent example of this was I had a client who was looking to sell her 2-bedroom Beechwood villa, and she was approached by somebody else that was staying in a neighboring Beechwood villa, and they offered her $470,000 to purchase the condo, but they did not want to use a realtor because they didn't want to pay real estate commission. Well, she was going to go forward with that sale, but it ended up that the buyers backed out. And so she decided to list with the Miller Group, and we ended up listing it for $549. And within 2 days of having it on the market, we had a full price cash offer for $549. And that property has since closed. And even after paying the real estate commission to us, she netted 11% more than she would have if she had just sold it to these other folks for $470 without using a realtor and paying the commission fees. So the takeaway here is, especially in this hot seller's market, if your goal is to net the highest price possible, you want to make sure you list with a realtor, preferably the Miller Group. The second takeaway is about interest rates and mortgages. So yesterday I interviewed Ben Stevens with Capital City Home Loans about the lending guideline changes that have resulted after the Surfside condo collapse. But in our discussion, and by the way, that interview will be on our podcast, the Miller Group Real Estate Show, which will air next week. But in our discussion, we talked about interest rates, and specifically we talked about mortgages on second homes. The guidelines or the requirements for getting a second home loan has gotten a little bit stricter. Buyers will now have to put down 20% rather than just 10% on a second home mortgage, and their interest rate will actually be a little bit higher, about 0.5% higher. Lenders are actually treating second home mortgages like investment property mortgages. So like I said earlier, buyers are going to have to put a little bit more down, and they're going to have to pay a little bit higher interest rate. So we'll see if that has any effect on our local market. Obviously, a lot of our properties are second homes. So this could temper a little bit some of the demand for second home properties. However, I don't anticipate that there's going to be a huge impact at all on our real estate market from that change or interest rates rising in general. We have seen interest rates increase this year, but still they're low based on a historic precedent. I mean, they're still lower than what they were 30 years ago, right? So I don't think there's going to be a major impact. In particular, when you look at how many properties in the Amelia Island Plantation were purchased using a loan, over the past 6 months, only 36% of our properties were purchased using a loan. So I just don't see interest rates at the moment having a major impact on our market, certainly for the second quarter of this year. And we'll just keep track of that and see if anything changes as we move forward in 2022. Well, that concludes our market update for the Amelia Island Plantation, first quarter 2022. Again, we thank you for watching and being a subscriber to the Miller Report. And again, if you are thinking about buying or selling, we would really appreciate your business. You can reach out to me directly by calling or texting me at 904-557-5720. This is James Miller with the Miller Group, and we'll see you next time.